So welcome everyone, and thanks for taking the time to come to this conference today. So Matt and I are going to give a bit of an overview on natural capital markets and why you should be caring about natural capital in the first place. Matt will then talk about the Scottish perspective, so what the market trends are, the effect this is having on land values. I'll then go on to tell you about the outlook in terms of England, things like Biodiversity Net Gain and Nutrient Neutrality. And then we'll end on just looking forward, so where the markets are going in the future and what that means in terms of your investments. So the Natural Capital Committee define natural capital as elements of nature that directly or indirectly produce value or benefits to people. So these are termed ecosystem services. So examples are the food that we get from our environment, climate regulation, soil formation, and also things like the amenity value and recreation that we get out of nature. So they're all really pivotal to a well-functioning planet, the organisms that live there, and us as a society to actually get the most of where we live. But it is under threat, as we're all aware. There's a worldwide biodiversity and climate crisis. Nature recovery is massively underfunded, and there's a depletion of natural resources. This poses a real risk for businesses, their earnings, and investors as well. But there is this opportunity, and now is a critical time to actually jump on this opportunity. We've got pressure from local, national, and international policies that are pushing for these environmental improvements. You've got consumers and customers pushing for better environmental, social, and governance from the businesses that they're interacting with, the stakeholders that want more from these companies. And we're now at a time that we're actually developing tools and metrics to place a value on these ecosystem services, the benefits that the nature can bring us. So we can actually quantify this and really be able to have some way of putting a number to something, deriving a way to increase that number, increase biodiversity, increase the amount of air quality improvements we have in the world, and from that potentially derive some financial revenue to keep that going and sustainable. So at the moment we have existing compliance and voluntary markets, and we'll touch on these in our brief talk today. And this really is driving the push for more local environmental offsetting. So very aware of carbon offsetting being quite an international thing at the moment. It's voluntary, but there is now companies pushing for wanting to do that offsetting locally, and they're not being so confident at buying their carbon credits abroad, internationally, where they're cheap and available, but actually wanting it to be a bit more transparent what they're purchasing and telling their customers that we're benefiting our local communities. To Matt.
Thanks, Lisa. And I'm sure that everything Lisa just said is not controversial. I'm sure almost everybody in this room agrees that we need to invest heavily in our natural capital, in the infrastructure of our living world. Then the question flows, well, how do we do that? And one of the ways that we can do that is through emerging natural capital markets. And in Scotland, by far the best established of these natural capital markets is the voluntary carbon market, which allows landowners who are creating woodlands or restoring peatlands to monetize and sell the emissions reductions that those projects are delivering. And I think a good way to think about Scotland's role at the moment within the natural capital space is that it's really the supply-side powerhouse for domestic carbon credit generation. So we've got nearly 70% of peatland code projects north of the border and over 80% of woodland carbon code registered woodlands in Scotland as well. But being good at carbon doesn't mean that Scotland is necessarily a leader across all areas of natural capital. And I think it's notable that the Scottish Government still hasn't committed to introducing a compliance market for biodiversity like we've got in England. There are some signs in the latest version of the National Planning Framework, NPF4. There are hints that a compliance market for biodiversity may be coming in Scotland, but I suspect that it'll largely be driven forwards by local planning authorities and the private sector. That said, the voluntary carbon market is big enough on its own that it is making an impact on Scotland's rural economy. In 2018, the average landowner was being paid between £2 and £3 per carbon credit. Now the average price for a tonne of carbon is somewhere between 20 and 30 pounds, but we are seeing outliers who are able to sell their credits for more than 60 pounds a tonne. At the same time, the landowner understanding of how to monetize these assets has evolved substantially. Gone are the days where landowners think it's sensible to sell 100% of their project's carbon as PIUs up front. The agreements that we're seeing being brokered now are far more sophisticated, and rightly so. And the scale of this market, the trajectory that it's on is quite incredible, and it's really starting to touch rural businesses in a variety of ways in Scotland. It's also feeding through to land prices, as you can see on that graph there, and I think it will continue to do so. So what that leaves us with is a situation where natural capital, and particularly woodland carbon, is joining forces effectively with timber and driving massive land use change in Scotland. We're now seeing more than 10,000 hectares of woodland creation every year as the norm in Scotland, which is more than 80% of the UK's total woodland creation. So this is a significant force already at play in Scotland's rural economy. How it's going to interact with emerging markets for biodiversity and water, how it's going to interact with the new subsidy regime remains to be seen. But I think one thing we can be certain of is that the rate of evolution is going to continue at pace in this space. Back to you.
So, as Matt already touched on, Biodiversity Net Gain is actually happening as a policy in England. So there is, with the Environment Act, there's going to be a mandate for developers to deliver at least 10% biodiversity net gain for their developments in England specifically. And this net gain is to be delivered as local as possible to the development site. So there is still that mitigation hierarchy of delivering it on the development site as far as possible and then within the local planning authority's area. There are statutory credits that are going to be available where there just is no availability of land to do such offsetting, but that really is a last case scenario. And the real aim of Biodiversity Net Gain is exactly that, to improve biodiversity in where it is being affected immediately, but also just nationally as well, to really drive our biodiversity in the country. And Natural England have developed this biodiversity metric. It uses habitats as a proxy, so determining from the habitat type itself, the condition that habitat is in, then what value that would be in terms of the amount of biodiversity that it would likely support. And it's gone through many iterations, a lot of stakeholder engagement in terms of getting this metric to where it is now, and the latest metric is soon to come out, the statutory metric 4.0. And that will be the basis on which this 10% is quantified. The offsetting itself is required for at least 30 years, so you are locking in land for this purpose for 30 years. Whether the ownership changes or not, that land has been dedicated for that purpose, so something to be mindful as a landowner. And the sale of these units can be a very attractive financially for landowners, especially at this point in time where there's very little supply for biodiversity units. There's not many landowners actually going about creating these units through habitat creation and enhancement schemes, putting them on the market. And so right now, with demand growing and growing, as we're seeing local planning authorities actually putting this into their policies and forcing this through the planning process, there is already a growing demand, yet the supply not really taking off as quickly does mean that you're able to sell units for quite a marked price. As time goes on, as the legislation comes into place late next year, that demand, we're likely to see that continue to increase, but also the supply and the competition will also increase. So then it really is pivotal that when you're developing these biodiversity net gain schemes, that you're making it the most cost-effective scheme that you can, doing it at landscape scale, making sure that what you're delivering is appropriate for the environment. So the habitats you're proposing to create will be created very easily. You'll achieve what you're trying to achieve, and so you're minimizing your risks, and that's going to help you in terms of the legal implications behind getting involved in such schemes. The other thing we're seeing in England is a growing need for nutrient neutrality. It's been across the news all year, really, in terms of different catchments across England coming into experiencing the need for delivering nutrient neutrality for development. So new housing proposals having to evidence how having that development in place and in operation into the future will not put extra pressure on protected or vulnerable watercourses, and so through that having to create wetland areas that can trap those nutrients and filter those nutrients out before they reach those watercourses. So currently we have 74 councils affected, I believe, and this is expected to keep increasing. The problem isn't going to go away overnight. There is an opportunity for landowners who are located in those catchments to actually partner up with developers to provide those offsetting. You know, if you have land that's in that catchment, but it's maybe not having development potential because of the flood zone risk, flood risk in that area, then you may have potential to create that wetland and sell the nutrient credits that come out of that to local developers that are being affected by this and can't get their development through planning until they evidence they've contributed to this neutrality. Important to note, though, this offsetting, they're predicting it being required for 80 to 125 years, so you really are committing that land for that purpose. And again, it is making sure you're doing it in the right place. There's no other good use for that land other than for habitat, wetland creation, water attenuation. And again, similarly to Biodiversity Net Gain, because it's so local, the need is so specific to location, it can be a really attractive option financially for a landowner, especially if you're doing it on land that isn't deriving you good returns through agriculture, it doesn't have development potential and the like. So looking forward.
Yeah, so that's a very quick canter through the sort of state of the UK's natural capital markets at the moment, looking really at carbon markets in Scotland, biodiversity net gain, and nutrient neutrality in England. But what do we think is going to come down the tracks in the short to near term in the future? Well, a couple of things. I think one trend that we'll see is expansion of the remit of existing natural capital standards. So the Peeling Code is likely to include additional categories in its next version, which is going to be launched next month. It's likely to start including lowland fens, as well as the upland blanket bogs and raised bogs that it already encompasses. I think we'll see the proliferation of new natural capital standards continue as well. So we already know that in the works there's a hedgerow carbon code, a salt marsh carbon code, at least 2 nature standards for biodiversity credits, and I think we'll only see that trend continue and grow. And it could become quite a complex scene for landowners and land managers in the future, deciding which code is best suited for them and what the idiosyncrasies of each of those standards are. I think we'll see biodiversity net gain in England continuing to gain traction, and I really hope that Scotland follows suit. And I think over time those compliance markets will gradually transition into a more holistic form of offsetting, which is known as environmental net gain. But the reality is that these natural capital markets are, and I think for some time will remain, a work in progress. They are not even close to operating at the scale required to close the nature funding gap that we're currently facing. And ironically, part of the problem is scale itself. Institutional investors are really looking to deploy large amounts of capital, and at the moment we're just not really seeing the scale of project emerging to be ready to receive that level of capital. And so I think there's a massive role for government to try and scale these industries up going forwards. I'd really like to see the Scottish Government in particular putting both arms around the natural capital opportunity and really working hard to realise their stated ambition of a values-led, high-integrity natural capital market in Scotland. We know from the experience of the Scottish commercial forestry industry that when you get regulation, fiscal incentives and state support combining in an effective way, then the private sector will come in and do what the private sector does, which is allow large amounts of investment to flow towards attractive markets. So I hope the government can see that and can take the initiative at this time. But we also know that we can't just leave this up to government. I mean, anyone who tuned into Jeremy Hunt's incredibly depressing autumn statement last week knows that the economic situation is bleak, the economic reality is going to be bleak for some time. Public spending is going to be more constrained probably than it has been for many decades. And so I think it's incumbent on those of us within the private sector to really take the initiative here, to drive this forward, to keep innovating, to keep pioneering, to keep proving concepts, and effectively creating an unstoppable momentum in the natural capital space, a clear trajectory towards success. I think that's going to be absolutely critical. Because the problem we know is actually a fairly simple one. We just need massive investment into nature recovery to try and bend the curve on biodiversity loss, to try and get more money into climate mitigation and adaptation. But the challenge, as I'm sure we'll hear more about later this morning, is going to be in the nitty-gritty. How do we do that? How do we do that in a way that's efficient, that's equitable, and ultimately that's profitable as well? So thanks very much for listening.